Imagine the year is 1815. On the fields of Waterloo, Belgium, Napoleon Bonaparte's army is locked in a decisive battle that will shape the future of Europe. His forces face a combined army of the British and Prussian forces, led by the Duke of Wellington. The outcome of this battle will change the course of history. Napoleon's ambition has been unmatched, but today, his reign is about to end. 200 miles away, in London, Nathan Meyer Rothschild, one of the most influential financiers of the time, sits quietly at the London Stock Exchange, preparing for what is about to unfold. Rothschild's demeanor is calm, collected, almost detached. Yet, Rothschild has something no one else in that room possesses. Information. He has set up a courier network, one of the fastest in Europe, using pigeons, horseback riders, and hidden routes to deliver critical news faster than anyone else. The rest of Europe will have to wait for days to receive official reports from the battlefield. But Rothschild will know the outcome in 24 hours. On the afternoon of July 19th, Rothschild's courier delivers the message. Wellington has won. Napoleon is defeated. But Rothschild doesn't announce this to the market. Instead, he begins selling off British government bonds aggressively. As Rothschild's actions become apparent, the traders in the room panic. Why would he sell British bonds when victory is certain? They follow his lead, selling bonds in fear that Wellington must have lost, that Napoleon is about to return. The price of British bonds collapses, and in the chaos, Rothschild's agents, planted across the exchange, start buying at rock-bottom prices. The next day, official news arrives, confirming Wellington's victory. British bonds skyrocket, and Rothschild, by taking advantage of his information network, has made an estimated $40 million in one day, equivalent to $5 billion today. This wasn't insider trading. There were no laws against this kind of strategy at the time. Rothschild demonstrated the true power of information. Arbitrage, using superior information to control financial markets. But this was not just about wealth. It was a demonstration of how financial power could be used to shape global events. Rothschild controlled capital, debt, and information. And this would be the foundation for building an empire that would last for centuries. Over the next 200 years, 5 banking families, Morgans, Rockefellers, Warburgs, and others would create the financial systems that govern the modern world. This narrative is not a conspiracy theory, but a documented financial history that is still relevant today. These families didn't operate in the shadows. They operated in plain sight, creating systems and institutions so intricate that nobody questioned who built them. But how did they do it? How did they gain control over nations, governments, and economies? Stage 1. The rise of the Rothschilds and control over European government debt. To understand the Rothschilds' success, we first need to look at the historical context in which they began their ascent. In the late 1700s, European monarchs were constantly at war. These wars, particularly the Napoleonic Wars, required massive financial resources. But the kings and emperors of the time couldn't just sell bonds like modern governments do today. They needed private bankers to finance their military endeavors. Traditional banking was limited by geography. A bank in London could lend to the British government, while a bank in Paris could lend to the French. But there was one family that saw the potential for moving capital across borders. The Rothschild family, led by Mayer Amschel Rothschild, a coin dealer in Frankfurt, began to see an opportunity that no one else had yet considered. Mayer had 5 sons, and each was sent to a different financial capital across Europe. Jonathan went to London, James went to Paris, Salomon to Vienna, Karl to Naples, and Hamshaw remained in Frankfurt. By spreading their network across Europe, the Rothschilds could move vast sums of money between countries. They could finance multiple governments at once and hedge their bets. In the Napoleonic Wars, the Rothschilds financed both the British and French governments, ensuring that whoever won the war would owe them money. If Britain won, Rothschild would be repaid. If France won, Rothschild would still be repaid. It was a financial system designed to guarantee the Rothschilds would profit no matter the outcome. By 1815, after the Battle of Waterloo, the Rothschild family had already gained control of half of all European government debt. At this point, the Rothschilds were well on their way to becoming the most powerful financial institution in Europe. But the Rothschilds didn't stop at just financing wars. They understood that debt could be used to control governments. With their vast holdings of government bonds, The Rothschilds could influence political decisions. They held the keys to European governments' fiscal survival. They controlled their debt. Stage 2. Expanding the Rothschild influence to America. While the Rothschilds' empire was growing in Europe, their sights were now set on America. The United States, at the time, had no central banking system. There was no Federal Reserve to control the money supply. The U.S. was growing rapidly, but it needed capital, particularly for railroads, factories, and infrastructure. In the early 1800s, America didn't have a central bank. The first Bank of the United States had expired in 1811, and President Andrew Jackson killed the second Bank of the United States in 1836 due to his deep mistrust of central banking. Jackson famously declared, "You are a den of vipers and thieves. I intend to root you out, and by the eternal God, I will root you out." Yet Jackson's efforts could not stop the financial tide. America still needed massive amounts of money, especially to fund its growing infrastructure and industries. But the American banks couldn't provide this capital at least not without the help of the European financial giants. Enter the Rothschilds through agents like August Belmont, who moved to New York in 1837 to represent their interests. Belmont helped arrange loans for American railroads, and by doing so, integrated American capital into the European financial system. During the Civil War, both the Union and Confederacy needed money. European banks, including Rothschild-affiliated institutions, provided loans to both sides, helping fund the bloodiest conflict in American history. But by the late 1800s, an American financial titan would emerge who would dramatically change the course of U.S. banking. His name was J.P. Morgan. Stage 3. J.P. Morgan and the American Financial Revolution. J.P. Morgan, born in 1837 into a wealthy banking family, would come to dominate American finance. In 1871, Morgan partnered with the Drexel family to form Drexel, Morgan & Co., which would later become J.P. Morgan & Co. Morgan was known for his ability to consolidate competing industries into monopolies. He famously merged Carnegie Steel and other companies into U.S. Steel, the first billion-dollar company in American history. He controlled the majority of the U.S. railroads and was a key player in the banking industry. But despite his immense wealth and power, Morgan was still deeply connected to European financial institutions, particularly those associated with the Rothschilds. Morgan became the bridge between European capital and American industries. In the Panic of 1907, the U.S. financial system nearly collapsed. But once again, J.P. Morgan stepped in, saving the U.S. economy by coordinating a rescue operation with the leading bankers in New York. This crisis further highlighted the need for a central bank in the United States. Stage 4. The creation of the Federal Reserve after the Panic of 1907. It became increasingly clear that the U.S. needed a central bank to stabilize the economy and avoid future financial crises. The lack of a central institution to manage the money supply had led to the collapse of banks, and the government was ill-equipped to handle a financial meltdown. The banking elite, including J.P. Morgan, Rockefeller, and Rothschild, knew that the solution to this crisis lay in the creation of a centralized institution. In 1910, a group of influential men, including Nelson Aldrich, Paul Warburg, and J.P. Morgan, secretly met at Jekyll Island to craft the legislation that would become the Federal Reserve Act. The Federal Reserve was born, a private entity that controlled the U.S. money supply. The Federal Reserve wasn't just a government entity, it was a private institution that would serve the interests of the wealthiest families, ensuring that their financial power remained untouchable. Stage 5. The global institutions and fiat money after World War I. The U.S. emerged as the dominant financial power. The Federal Reserve, IMF, and World Bank became the cornerstones of a financial system designed to keep the U.S. at the top. These institutions would give central banks the power to control global finance, leading to an era of unprecedented growth for the U.S. dollar. By 1971, the gold standard was abandoned, and central banks could print unlimited money. The U.S. dollar became a fiat currency backed by nothing but the trust in the U.S. government. Since then, central banks have created trillions of dollars through policies like quantitative easing, which has concentrated wealth in the hands of the richest families and corporations. Today, the financial system is controlled by a few powerful institutions: the Federal Reserve, the IMF, and the World Bank. working in coordination to maintain the status quo. These institutions control global monetary policy, and their influence shapes economies worldwide. As we move forward, the future of this system is uncertain. With global debt at unsustainable levels, the question is, how much longer can this system survive before it reaches its limits? Understanding the history of how this financial system was built is crucial to understanding the challenges and opportunities that lie ahead.